we highlight really the events that impacted on the results for the last 6 months. I think there's definitely a couple of things that the public and the investors should take note of in evaluating the performance for the last 6 months, and particularly in comparison with the previous 6 months of 2015, and also the 2015 overall results. And it's always important to really look at the income side. Now, what you see on the slide there is the policyholder and also the shareholder total view. And as you can see, the premium income dropped from 1.3 billion to 1.2 billion in the comparative period. And you can clearly see it's under the single premium income that we experience quite a decrease. Now, single premium income, that's mostly driven by annuity income and also credit life single premium income, where we experience quite a drop, especially towards the end of the last couple of months of semester 1. We see the single premium income drop from 805 to 615 million. On the positive side, of course, the recurring premium income increased by 8%, which is very encouraging to us because that really is the reliable income stream that you want to increase on a consistent basis. So I think in terms of achieving that, Botswana Life especially has done very well. If one look at the fee income decreased by 8%. That's of course the fee income coming from BIHL. And we're expecting, as Catherine pointed out, quite an upside potential as the assets under management is expected to grow quite handsomely over the next 6 months, and you will obviously then see the fee income increasing in line with that increased level of assets under management. Investment income, as we can see there, very predictable really, the investment income, because that's your income coming from deposits, rental income, and dividends received. I think the big thing that really stand out in these results is your investment surpluses. I think that the Brexit vote couldn't have been at a worse time for us, because it had a notable impact on the foreign exchange markets, which directly impacted on our bottom line. As you can see, almost, well, not almost, over 500 million change from June to June 2016. Now that had by far the biggest impact on the total income on the policyholder side. Total income decreasing by over $500 million, mostly coming from the negative investment surpluses. Just looking at the analysis of earnings. Now this is the shareholder income statement. Operating profit decreased by 6% from 188 to 177, and there I need to point out we had seen very positive in the economic conditions, very positive return from Botswana Life, where we actually saw an increase, single-digit increase in the operating profit that was offset by lower operating profits coming from BIHL, Legal Guard, and then there were also some goodwill adjustments that we also put through during the last 6 months. Investment income, we've referred to the investment income, good increase there. And then in terms of core earnings, we experienced a 3% decrease. I think very good to experience this 6 months is the increase in the share of your equity accounted earnings, where we saw a 38% increase, 85 million to 118 million. Now, that's the income or the equity accounted earnings coming from the increased investments in Letsego, FSG, and then the new investments in Nika Holdings and also BIC. So we can expect those income streams to be a more dominant proportion of the earnings of the overall shareholders' income statement. Those two combined, the core earnings in the share of profit of associates and joint ventures, those are really the businesses that we can predict with a reasonable amount of accuracy in terms of future contribution to overall profitability. Which brings me to the next one, which is the investment gains, and in this case, in fact, losses on shareholder capital. Last year we had a profit or a gain. It's really unrealized gains mostly, 45 million, and that turned around to 12 million. So that's a 56 million turnaround compared to last year, which clearly had a severe impact on the profit before tax. I mean, if you just normalize it to last year's level, it would have been a positive increase in profit after tax. So I think that's quite important to note. And as in the past, we've always warned that line really is very susceptible to market conditions. However, having said that, as we move excess capital towards investments in associates and other financial services in the group, you can really expect that line to be a lot less volatile, because obviously the quantum of investment in excess capital will be decreased to a level where market volatility will not really impact that severely on the results. So in terms of shedding excess capital or channeling excess capital into more predictable type of investments, I think the market can definitely expect a lot more predictability. I'm probably repeating myself, but predictability in terms of the returns that we're going to announce and achieve in the future. I think in terms of the results achieved, and also in terms of the dividends that were declared, it's still quite an achievement to at least maintain your embedded value at that level. In terms of required capital, 7.5, very strong situation, a nice position to be in. The decrease really from June to June 2016 as a result of increased dividend declarations as we get rid of excess capital. And also in terms of your additional capital requirements, because the more business you bring onto the book, the bigger your liabilities, the more capital you of course require. Assets under management stable at around the 21 million level. And then in terms of dividends, the June dividend that we paid in the last 6 months, 202 million, compared to 126 million of the previous year. And a total dividend paid in 2015 of 281. So you can clearly see increased dividends still are quite visible. We refer to the strong capital position, and the focus really is now on continuing to leverage off the strong financial position and the capital available. Not only that, I think going forward, going forward, there will be a lot more focus as well on influencing these investments that we acquired. We don't see that as passive investments. We see that as investments where we really can contribute with the build-up knowledge that we've acquired over the last 40 years. And then, of course, focusing on return on group equity value and the efficient management of excess capital, very high on the agenda.